Gold prices jumped again more than 1% on Monday to hit a record high as safe haven demand surged on fears of a global trade war for reasons, well, we've already discussed. Spot gold was up 1.5% to $2,903 per ounce on Monday afternoon after hitting a record high of $2,905.98 or almost $2,906 earlier in the session. That's the seventh record this year, according to Reuters. US gold futures were at about $2,929. India's gold prices are also edging towards about 90,000 per 10 grams now. They're edging towards that. So where are they, or rather, where could they be, and what could drive prices, including in India, further? I spoke with Jigar Pandit, Senior Vice President and Business Head of Commodity and Currency at Mirae Asset Sharekhan, and I asked him about assessing the factors that could drive prices up.
Certainly, you have nailed the question in terms of the institution buying. So I'll just take you on some statistics numbers. If you talk about 22, 23, and 24, the gold purchase by the central banks are almost double of what they bought it in from 2010 till 2021. So when I'm saying double, so from 2010 to 2021, the average central bank buying on a yearly basis was anywhere between 475 to 500 metric ton. But if you talk about 22, 23, and 24, the average yearly buying was something around 1050 metric ton. In last 3 years, central banks have bought extremely high. So that's one of the reasons why gold have gone up, and then followed by the geopolitical tension and all those things. But central banks buying has definitely played a big role in terms of pushing the gold prices to a new high.
So you're saying a total of about 1,000 tons per year were bought by central banks between 22 and 24?
Yearly around 1050 metric ton they have bought in 22, approximately 1038 metric ton in 2023, and nearly 1000 metric tons in 24. So every year they were buying 1000 plus metric ton from last 3 years.
How are you seeing the trend right now in 25 calendar? Are you seeing that this is continuing? Is it stepping up?
So from central bank buying, yes, definitely it is stepping up. One is definitely few of the countries where the central banks wants to definitely reduce the dollar reserve exposure and increase the gold reserve. So that's one of the main reason why they are very slowly, steadily, but for a longer term and with a defined quantity.
How are things looking on the retail side? I mean, in India too, now we are obviously seeing prices inching towards 90,000 rupees for 10 grams. Is that likely to continue? Is it, as of now, what are the kind of signals you're seeing?
Basically, although we are the one of the biggest consumer in gold, but we are still a price taker and not a price giver. So basically, we don't dictate the price in the international market. It's basically the international prices which dictates us. If the international prices goes up by 10%, definitely in Indian market also the prices will go up by 10%, assuming the USD INR is at same level and the custom duty is same. So if the international price goes up, definitely in India will go up. And looking at the retail, yes. So if you talk about, I think 2024, early 24, there was a heavy premium in gold ETF in China, right? Because the reason was China market was not doing good, economy was not doing good, and definitely money was chasing gold. There was a very big premium in ETF. So it's the case now. People are definitely watching at the US data, US inflation, how it is, turning up, and based on that, how the interest rate cut will come. So at the start of the or at the end of the 2024 market was expecting there would be hardly any rate cut for 2025. But now market is expecting that in 2025, definitely there would be two rate cut. So that anticipation prices is going up. Third point, because of this tariff war, US traders are expecting that there would be a definitely tariff impact on gold. And hence, if you have, I mean, we have seen in last few days or few weeks, there's a heavy import by US from Switzerland. And in fact, New York market is at premium of the LBMA market. And the reason is very simple. Traders in the US market, they need a physical delivery. And they're anticipating that if the tariff war starts, then definitely there would be a big tariff or the duty or the gold import. And hence, with that, they are, taking a physical delivery.
Right. And what does all of this add up to, both the retail trends as well as the institutional trends, to how the prices could move to the extent that we can project or predict in the next month or so?
by next month, definitely the way it is going right now, it is trading at $2,910 odd dollars. So if the same way it continues, definitely we see anywhere between 95, 94, 96,000.
Thank you so much for joining me.